Hello viewers, now I took one of the most famous turtle strategies from this book here. I updated it to my world, to the world of Renko, to see what results I could get, and those results were very surprising indeed. I tested it across 4 of the major futures contracts that they used themselves back in the 1980s. And in this video, I'm going to take you through the exact strategy, one of their most popular, one of the most famous ones they used. I'm going to show you how I updated it for Renko, go through the results I got and show you how you can do it yourself as well. So with that, let's get into it. So this was the original turtle strategy. It was called the Donchian trend strategy. It was a breakout system on futures markets. It used a daily candlestick chart, a 20-day Donchian breakout for entry, a 10-day Donchian for exit, and had this 25-day, 350-day moving average trend filter. Trades were only taken in the direction of that trend and had various risk and sizing parameters. So what does that look like? Can we visualize that strategy? I'm going to show you now. So for the example, I'm using the S&P 500, ticker ES. You can see in the top left the indicators that we're using for this, the original turtle strategy. 25, 350 moving average, and the 10 and 20 Donchian represented by the blue bands and the black bands there. You can see our orange line, that's the real slow moving average, and our faster red moving average. So that was the basic original strategy, but I took that and converted it into Renko. So this is the rule set for the updated Renko version of that turtle strategy. As you can see, not a lot of difference really there. I tested it on 4 specific markets across different sectors. We got ES, so for stock indices, CL, WTI, crude oil, GC, gold, metals, and 6B, GBP, USD in the Forex. And they were 4 markets that they actually used back in the 80s. So all I did different was got the 1-minute Renko chart, used a medium block size filter to represent a longer holding period, slowing it down. And you can see the rules pretty much the same: 20, 10, 25, 350 moving averages, all the same, only taking trades in the direction of the trend. And for the stop loss, using a 3 ATR multiplier. So what does that look like on the trading view charts? So this is the Renko setup. The top left, we've got the S&P, ticker ES, block size 5. You can see I've used exactly the same indicators and inputs. And top right, we've got the GBP, USD, ticker 6B, block size 0.0004. Gold, bottom left, block size 6, and bottom right, crude oil, block size 0.1. So quickly just show you how I got the block sizes. So I was using my block size calculator to do this very quickly. I found the annualized volatility. This one's for gold. I found the current price. I picked the appropriate bucket, and then that's the volatility bucket, and that gave me this spectrum of potential block sizes to use, from the very fast to the very slow. We were after the medium size, so I took that 5.77, rounded it up to 6, did that across all 4 markets, and came up with our numbers, and then just plugged them into the system. If you want to get your hands on the Renko block size calculator, I put a link in the description below the video. It's on the shop. It does save you a lot of time and is very good for finding the right block size by strategy. So to test this, I needed more of an automated process. You know, it's no good just looking at the last 10 trades across those markets and saying it works or it doesn't. We needed a bit more of a significant test than that. I could have Pythoned it all out, but I decided to use NinjaTrader Desktop. Quite simple sort of plug and play back testing engine they've got. It works also for Renko. I'm going to show you how I did all that, set it all up in a moment, but took also 3 years of price data history. I'll explain why I use that as well in a bit. All very simple, all very straightforward. And like I said, once I'd created that strategy in NinjaTrader and then ran the backtest, got the results, and we're going to have a look through those. But let's start with
showing you how I got the strategy all set up and working.
So like I just said, and for ease of use, I used NinjaTrader's strategy builder to show you that really anyone can do this sort of thing. And all you have to do, like I said, go to the new tab, go to strategy builder, and then create your own strategy. I called it Renko Donchian, and then work your way down those tabs there to create your strategy. And really there wasn't too much to this one. No inputs in the first few input sections, really only until we got to inputs and variables, where I set up the Donchian, the moving averages, the brick sizes, the stop loss, then into the rule sets, very simple like we've already seen, and then into the stop loss section, which we talked about, and then literally it's a case of just compiling and finishing it, and you have your strategy. So really simple. And once we built the backtest, we go to strategy analyzer. As you can see there, it will bring up this table for you, which you then have to complete the inputs. You can see in the top right, I've done the backtest, picked out our strategy, which is the Renko Donchian. Then you can see, because we set the inputs and parameters, they're all in there. We set the stop tick sizes. We've got the contract sizes in there as well that we need, plus the date period, which was 3 years of backtesting history. I could have spent more time optimizing, but I just wanted to run as good a period as I could. 3 years, I could have spent, like I say, more time breaking it down, doing walk forward analysis, all that sort of stuff. But to get raw numbers to see whether we got an edge, that's where you got to start with in backtesting. This was sufficient enough, covered enough interesting scenarios for me to be able to get some sort of decent results out of it.
So what results did we get? Well, I'm going to take you now through the 4 markets, the S&P, crude oil, gold and GBP, to show you exactly what the outcome was, and I think you'll be pleasantly surprised.
So let's start with the S&P 500, ticker ES, straight away to the total net profit at the top, 193,000. Remember, we start all these with 100,000, so we've nearly got 300,000 in the bank after running this for 3 years. Key variables, key statistics: profit factor 1.3, win rate 42-43%, and the key critical one for me in this instance, because of the low win rate, is the risk reward 1.54 to 1. So pretty good, keeping the strategy going there. Good RRR. And max consecutive winners 10, losers 11. So you've got to factor that into your strategy if you're playing this one. Winning trade, biggest $11,000, biggest loser $1,500, and just under about 3 trades today, so per day. So overall, pretty decent results over that 3-year period. And what about the equity curve? Let's have a look at that. And you can see big jump there. April of 2025 didn't start off so well, the start of the period, but the slope's not bad. It's been increasing nicely and includes that big old jump that we can see there. Now into gold. What have we got? Well, we've got not so much a big profit, still 129,000 though, so pretty decent. Profit factor 1.6, Sharpe ratio much better, 0.64, win rate 44%, and the risk return 1.81. So not too bad in terms of statistics. Biggest win just over 10k, biggest loss just around $1,800. Only one trade, less than one trade per day, probably because the brick size is quite large. Maybe some optimization to be done there, but overall pretty decent return. And the equity curve also not too bad as well, obviously accelerated by the recent gains in gold. Again, we'd have to optimize this back test further to prove that over the longer term that this wasn't a fluke and that it works better. But overall, as a starting point, looks like we got some sort of edge there as well. So into WTI crude oil, ticker CL. Profit wise, this was the big winner, $276,590 on a Sharpe 0.42, so not too bad. We had, a win rate of, got 51%, so not too bad really. but we still need a decent risk return out of that. And we got virtually a 1-to-1 there, 0.97 to 1. So not too bad there. The block size was small, 0.1, so it was quite aggressive. So I might slowed it down next time I did this, but that's what the block size calculator came out with. Got to factor in those consecutive losers there, 14. So build that into your trading. 11,000 best trade, 1,800 worst trade, nearly 7 trades a day. You can see that's because of that fast block sizing. Pretty nice looking equity curve, few drawdowns there to note across the curve. Definitely factor them into your trading and if you were ever going to optimize this further. So then we're into the pound against the dollar, ticker 6B. Good return, 165,000. This one had the best win rate, 64%, but it also had the worst risk return, 0.5. But overall, it was a profitable strategy. Profit factor 1.1. So, it worked and we had a reasonable block size there, medium paced one for this type of strategy. Best trade, nearly $19,000. So one of the biggest trade winners there. Downsides maximum minus 1950, 13 trades a day. So it's quite an aggressive one, even with that block size. So overall though, not too bad in terms of results. It's a positive curve, but very bumpy indeed. So, if you're trading this one, watch out, be careful, and I think some optimization needed.
So what does all this tell us? Well, it tells us that the Renko Donchian strategy did work, but it might need a bit more care and attention. Remember, we were seeking just the raw results to have a look whether the concept of the Renko plus turtles idea combined would produce some positive results. It has done. Now, as a sideline, I did test the old strategy with candlestick charts on their daily setup, which was its original factors, and I only got really off the same 4 markets a sort of flat return. So not the best, but obviously changing to Renko, being able to use the block size to our advantage, created an edge, a starting point where we could look further to develop this strategy. It's certainly got some legs. And another factor we didn't think about is combining the 4 futures markets into a portfolio, because that would probably smooth out the curve further and get us better returns. And there's some risk and trade sizing optimization against one another there to produce a better portfolio of returns as well. So lots to think about there, but basically, the Renko Donchian strategy did work. So if you want to build Renko systems like this, create your own ones, then the Renko Masterclass coming up in January might be of interest to you, where we put together all these sort of ideas, optimization ideas, how you can turn your trading into a business using Renko as the foundation. Masterclass January, end of, tickets available. I'll put a link into the description below this for you to follow if you want to learn more. Sale price on the tickets as well at the moment, limited to the first 150, and once they've gone, and they are going fast, so you have to act quick there. And also, if you want to get into the full automation world, got you covered there. And at the moment, we've got something called the Renko Mega Bundle on sale, saving nearly 60%. You get the block calculator, my book, the Python for trading course, the Renko bot course, and you get a free ticket to the masterclass as well. Like I said, 60% off that at the moment. Check that out in the links as well. And also some other various offers on the books and Renko resources, previous masterclasses, individual courses available as well. Again, links will be below this. So I'd love to see you on some of that over the next few months and into 2026. But for this video, I think we proved that the Renko Donchian breakout system from the old world of the turtles does work. We've optimized, made maybe the old system, old way better. It needs a little few more tweaks to optimize it, and I'm going to be doing that because there's certainly an edge to what we've seen there as a starting point, and that's what the back test can give us. It's not about, you know, predicting the future. It's about, first of all, working out whether we've got an edge or not, and we certainly have got something there to play with. So if you've liked today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell notification buttons, because plenty more content coming your way. So thanks for watching. I hope to see you soon.